Like the markets are basically trying to morph and to kill you. They're trying to take your money.
Welcome back, everybody, to Be the Trader. Today is a special day because I have a good friend and long time trader. Been trading for over 35 years. Michael Martin, who also has a great show and goes by multiple names: Martin Chronicle,
That's
Michael
right.
Martin Show, and the Inner Voice of Trading.
The inner voice of not trying to be found. It's so inconsistent. I'm like the biggest loser when it comes to marketing.
But I tell you what, you need to check him out. At least his book, Inner Voice of Trading. It's amazing. Michael Martin, welcome back to the show, my friend.
Thank you. You're the best ever, man. I really trying to be like you. I appreciate everything you do for the community, and folks should really make your show a daily stop.
Thanks, man. I appreciate that. I listen to your show so much. I even call you after I listen to an episode just to talk about what you just talked about because it's just so intriguing and interesting.
I always
But
take your call, man. I'm happy to talk to you.
thank you, bud. Well, I want to dive into today because you've been training for so long, and a lot of people don't understand that. They think, oh, once I've made it, like made money, trading for a year consistently, I made it profitable for 2 years. Like they think they're done, right? Like they think that they've made it and they're successful.
Yeah.
But I know that you've been, since for 35 years, you've probably met those people who've been consistent for a year straight, 5 years, 3 years, and now they're gone. Like they might have blown up. Maybe they left while they were ahead, but they probably destroyed their account. So I want to kind of go into that. Do you have any stories around that kind of a topic of people you've met?
Nah. No, I mean, there's millions, right? I mean, there's millions of that, of how people evolve, talent comes and goes just like people do. Sadly, I'm old enough to have friends who've passed away. Some of them committed suicide. Some of them were in tragic accidents. Some of them just died in their sleep. Just on the human scale. And as far as trading, I was talking with a kid yesterday in jiu-jitsu, and when he was 16 years old, he was ranked #1 in the world as a surfer. He had sponsored by Quicksilver, and he woke up one day when he was about to start college. He's like, I'm tired of this shit. It's hard on my body. I got to be up at 5 in the morning. I'm freezing cold. Southern California is like the largest nursery for juvenile great white sharks. And he's like, I'm just tired of it. I got burnt out. I just stopped. So I think that the reasons why people can have that moment, like the movie Awakenings, where they have this moment of lucidity and then they go back to being catatonic or otherwise, there's myriad reasons. There's internal, external. The one is that you constantly have to have goals. You constantly have to be working on yourself and stay focused. Like, what is your objective? You know what I'm saying? What is the objective? And take it like Napoleon Bonaparte, who said, whenever I go out on a military campaign, I'm absolutely going to hit my objective. The obstacles must clear out of the way. And a lot of folks, they get comfortable and they lose sight of the prize because they don't have their goal was to make it.
Mm-hmm.
A friend of mine said he got divorced. He said, well, my wife told me straight up, I want to get married before 40 and have kids. And that's exactly what they did. Then they got divorced. Why? Because the goal was to get married before 40 and have kids. There wasn't part of the goal to raise the family, go to Europe on vacations, upscale their homes, and any of that stuff. So the internal reasons are, they lose sight of the goal. That's the macro. The micro is that markets change, right? The way I traded when I first was coming out of the gates, and I thought I had some bit of talent. I couldn't prove it, but I had enough to keep me going to the next day. Those styles and those strategies over longer periods of time become obsolete. So you constantly need to upgrade your skills. And once you start making some money, not you, once a person makes money, and that main goal of getting married before 40 and having kids is like they stop growing. And that, to me, is a death knell for a person. They constantly have to be, you have consulting clients, right? They pay you for different reasons or whatever. A lot of folks pay me because I'm in Los Angeles. I'm not going to be at the local watering holes in all the big trading cities. I'm very dislocated from everybody. And the same reason I saw, Ed Secoda Incline Village Trading Triangle, some of it's for accountability. They do better in a program because they want to be accountable, and as long as they keep their goals. Like, I got my goal cards right in front of me. This isn't just some kind of like bullshit thing that I'm doing. I live it, you know what I mean? So they lose sight of the focus, and they stop having goals, which means personal growth for me. Their skill set wanes, right? Like I could be the best typewriter maker on planet. I could make you a custom typewriter, but who cares anymore? You know what I'm saying? Where we could sit on the phone, like I use Rev. I'm not endorsing them, but I create automated transcripts. So I don't even have to type anymore. I record the thing. I give them a link to the file. It creates an automated transcript. Now, granted, there's typos and it misses a few things, but ultimately, some people can read faster than listening to how I speak. And then the market, the markets change. The markets will morph, and things that worked even last year might not work so cleanly this year. And that's something that I learned a lot from Victor Sperandio, who basically said it like the markets are basically trying to morph and to kill you. They're trying to take your money. They're always, if it's not other people, it's the market that's trying to test you and to keep picking at you to see if you'll lose your discipline. Because at the end of the day, I don't even know now if I have any skill, but I have discipline that's come full circle on myself. And I think when you get into the professional level, it comes down to success or staying power, because that's your original question, comes down to who has the most discipline. When you get successful, you're like, yeah, I'm just going to take a flyer because I'm Mike Martin and all the wonderful things come my way. But market doesn't care who you are. Market sees 10,000 shares of Nvidia trade. Doesn't care who owns it or not. And guess what? The folks at Nvidia don't give a shit whether you own it or not either. So it all comes down to you and your higher power, and how do you handle your sense of discipline. So I think in and around there, it's like lack of a vision. You lose a vision or you stop having one, or the market kind of grows away from you, and that's the part of your yard where you cut the grass but you don't use the weed whacker. You know what I mean? So so in a long-winded way, I think those are some of the primary reasons. Or the simplest Occam's razor version of the answer is, once people achieve a certain level, they've been there, done that, and they don't want to do it for 20 years. They want to try to do, maybe they want to buy and sell, real estate and create passive income. It's better tax treatment. I can become my own bank. It's not a lot of work, and I don't have to get up at 5 a.m.
Cobra Trading is the go-to broker for day traders and short sellers. And I'm not the only one saying this. In fact, Benzinga awarded Cobra Trading as the go-to broker for short selling. They have a heavy focus on direct market access order routing, so you have the fastest execution. They have some of the best locate prices and availability. They also have amazing customer service. I've experienced many different brokers, and it's why I use them every single day and why I'm proud to have them as our sponsor. Sign up now by clicking the Be the Trader referral link below and earn 1 free month of software with Cobra and 25% off all commissions. Now let's get back to the show. Would you say that you've had to change would you say 10 times throughout your career, 20 times, 3 times? Like how often are you having to adapt to the market itself? Because people hear adapting and they might think, oh yeah, like I just got to adapt, maybe they have their own assumptions. So what do you mean by having to adapt?
Well, the jokey answer is roses are red, violets are blue. I'm a schizophrenic, and so am I. You know what I'm saying? Because I have 17 different, personalities. Because ultimately, and I think proprietary traders can identify with this, your goal is to kind of grow your capital over some window of time. And I don't mean from how long you hold a trade. I'm just saying over the window of time of however you exact your strategy over time. You want to have more at the end of that period, pre-tax, after-tax, than you did when you started. All right, it's up for you to figure out in the scales of justice what that means for you. But if you work and you run other people's money, you have to be cognizant of the fact that people are extremely fickle, and that ultimately the retail phrase of the buyer is a liar is in full force, and they'll look at you like a Hollywood agent and say one thing but mean something completely different. And if you don't perform, they leave. They vote with their feet. So you have to always do what you say you're going to do, right? Because you're given full discretion, right? So these people are very smart. And then ultimately you have to make the money. in their world, the way they perceive communication with you, you have results or you have excuses. Because these are successful people who are used to getting stuff done. So they want to be in business with other people who know how to execute. You know, and lucky for me, I had really good parents. I had a great environment, and they knew how to execute. They were full of integrity. They were full of character, and they didn't say things that they couldn't live up to. And so my sister and I were, exposed to that for as far back as we can remember. So we have an enormous amount of grit. But we also, not to get into the religion, but we were raised in a Catholic Christian home, and we just never did unto others. We don't make promises we can't keep. And, if you make a promise to somebody, you have to deliver on it. That becomes an obligation, a moral obligation. So when you run money for people, they don't want to hear like, oh, the market environment is really crappy, because it kind of is right now, right? They just want to get results. They don't want to hear excuses. And that's kind of how I've always looked at it. You have results or you have excuses. As far as the exact trading tactics, it's difficult in the beginning to say that, yes, I'm a Swiss Army knife, because I didn't know my backside from a hole in the ground, as it's very well documented, and I talk about it openly because I think a lot of guys are humiliated because they're like, man, I haven't figured this out yet. I'm putting so much work into it. First of all, you have to love yourself through it, because it's fantastically hard. The majority of people fail at this, not because they're not smart, but because of the emotional makeup that you need to have to face this every day, where there's an enormous amount of uncertainty. People don't like the feelings that they have in their body when there's great deals of uncertainty. So what do? They go get MBAs, they get law degrees, they get terminal degrees, they get jobs where things are very predictable. And there's nothing wrong with it. But to me, I always think it's a reaction to, do we embrace the uncertainty that you and I have to face, Alex, right, and everyone else watching the show, or do I want to change the nature of my income and my outcome by taking something that's a little bit more guaranteed? I don't make for a good employee. That might come as a surprise to you, because I have my own way of doing things. And I found it impossible for my emotional constitution and my personality makeup to just kind of do something blindly because a boss told me to do it. Because if I felt like I could bring some ingenuity to it, and I didn't have to play politics and watch my language and do all the other bullshit you have to do when you're in somebody else's house, I'm like, it's too taxing on me. Everything I do is entrepreneurial. How I come up with the sentences that I speak is fantastically unique. And a corporate environment is constrictive on me. And today it's 1,000 times worse. When you look at what's going on in colleges and schools, like, I would never pay that kind of money to have to deal with the bullshit you have to go through now. So I've morphed as a chameleon to, because I'm sorry, I take a long time sometimes to answer, because these aren't yes/no questions. You know what I'm saying? Like, these situations can seem like they move quickly, but they also can move like the glaciers, where they're actually moving, but you can't see them. Like the Earth right now is rotating on its axis, and it's moving pretty quickly. We can't feel it, but it's happening. And so over the years, like probably after 10 years or so, I did go back to options and learn about them, when at the beginning I didn't do very well with them. I was kind of break even to a loser trader. Foreign exchange I didn't like because it kept me up all night and it never really closed. But after I got really good at futures, then I went back to stocks, then I went back to options, and I filled in the spots. But I already had, like Tom Cruise said in Top Gun, I had my wingman. I knew what I could rely on, you see? Then you learn about calendar spreads in futures, which are very different than spreads in the options markets. And so then you become like this carpenter who has a lot of different tools available to him or her over the course of the year, and you keep track of what strategies are working, which is kind of what I do now. I'm taking the pulse all the time of what strategies would be working. And so for part of the business, yes, it's purely systematized. Then for the other part that's discretionary, you have to figure out when to use the screwdriver, when to use the hammer. And you know when to use the hammer, baby, because that's what they call you, the hammer.
Okay, so they do not call me that, but so it's interesting. You brought up the idea of uncertainty, right?
Yeah.
And a lot of people do struggle with that. I mean, almost everybody who in their trading, they struggle with uncertainty. And even traders who've been, it's still something that I feel every single day while I'm trading. Any advice to people on how to get more comfortable with uncertainty? Is there things they can do outside of the market as well to help them feel better about uncertainty? So when they go into the market, they're kind of training outside and in?
Yeah, this is probably the toughest part. And again, and why, certainly the neighborhood of why I think a lot of folks struggle for long periods of time and maybe not even make it is because in trading, we are dealing with probabilities and odds.
Yes.
And when you put on a trade, there's a probabilistic outcome. Whereas if you know you're going to Columbia Law School, it's a corporate law school, so you kind of know what field you can go into, and things aren't necessarily predictable, but you know wherever you end up, it's going to be super close to the bullseye.
Yep.
Right? Whereas with trading, you don't know. You might make all the money that say you're going to make 60% a year. Doesn't matter the strategy. You might find that you make it in the period of time that overlaps part of Q3 into Q4, and the whole rest of the year, you're just dying by paper cuts.
Yes.
What I call you ramp up, part of your capital goes parabolic, and then you have systematic attrition of capital. You're just going down 10 degrees because the market's not amenable to your trading strategy. So what I've become comfortable with, and it didn't happen overnight, was understanding that what I know about trading intellectually doesn't mean a rat's backside with respect to being able to execute and make money. And we have a lot of trading, what I call trading enthusiasts, which is kind of making fun of people, but also defining them accurately. Like they know a lot about, they look at this chart pattern. I understand that. And they know a lot about trading, but they can't do it. So that's the paradox with trading, is that you can understand a lot about how markets work. You might even understand that we have stocks and bonds, which would constitute capital markets. Then you have commodities, which are insurance markets, right? They're risk transference markets. They're completely different. But it doesn't mean you could trade any of it and make money. Because a lot of it comes down to, can you put on the trade and feel the feelings in your body that you have to feel when you don't know exactly how the thing is going to end up? How do you feel when you put the trade on and you might have to do that 7, 8, 9, 10, 15 times in a row, risking 0.5% and invite a 7.5% drawdown, right, in your account? When is that drawdown going to end? Nobody knows. But you lose, right? You become a loser, a losing trader, not because of your drawdown, but because you quit. So mentally, I process it like the best I can do is know my entry, know my position sizing, and know where my protective stop is. Words have power. I don't use stop loss. Because if you buy at 20 and it goes to 30 and your stop is at 27, what is that, stop gain? That sounds stupid. So just say protective stop, right? The words that you say in your head are conditioning you. It's behavioral software, so you have to watch your language. So my self-talk is very powerful, right? Like,
I love that.
Yeah. And I don't know if that's an edge. I can't prove it. Most other people be like, dude, he's ripping the Gorilla Glue. He's smoking pot out of a bong. He's taking Percy sauce and smoking the wax. And, it's too strong for me. I don't like being out of control in my brain. But the thing is like, the more you can see, we have reward and we have risk. Right. And the two are related. And the risk part is in the uncertainty. So you have to understand mathematically, which you can do. Again, people can position size, but they have no emotional intelligence around that actual risk that they can calculate. Again, complicating the matters of why a lot of people fail.
What do you mean by they don't have the intellectual part?
So in other words, I can figure out that 1 point on the E-mini is $50. And I can say that I got $1 million I want to risk. Say 0.5%, that's $5,000. How many full points of the E-mini move can go into that? So I can pick here's my breakout entry. Here's where my protective stop would be. And I can do all that in my head. But the processing of the feeling of that 0.5% risk on a per trade basis, trade after trade after trade, is something that they have trouble with from an emotional intelligence standpoint, right? So they can talk about it all they want, but the execution is where the money's made. And that goes back to dealing with the uncertainty, Yep. Then they fall into further bad habits. The thing starts to move off. It's down 40 points against you. Your stop is at 50 points. And then you start, this week there's supposed to be a slew of earnings. Nvidia's earnings are on the 23rd, and I think that's going to carry, and they fall into this fantasy that you can manage risk somehow based on future events that haven't happened. And all you can do is manage risk in the ever-evolving moment of right now. Like as we're speaking, market's still open, but at the end of the day, all you can do is manage risk in the present. And despite how you feel about things, again, not you, a person listening, you have to honor your stops. They have to be commitments that you make to yourself and become unwavering in that behavior, because behavior predicts where you end up.
Talking
it
about
gets
that,
kind of deep.
it gets really deep, and like behavior is where you end up, because over time, like you can be successful in a period of time, but then as soon as you lack discipline, you can immediately just disappear completely, and you can completely go away, like the Jesse Livermore, for example.
Yep. I agree 100%. It wanes, but you have to, the mentors that I worked with, we very rarely talked about trading. We also talked about emotions and psychology, because we knew that affected our behavior. It affects our judgment, right? And so it transcends life, though. Like if I had acquaintances that I knew in New York, and we'd all go out. Some of them were married, and I'd watch them sucking face with some person in the corner, and I'm like, I'm never going to trust that person with money, right? There's that study. There's that study that they do where, like, if you want to, go out with a future business partner, go out on the golf course, and do they move the golf ball without asking your permission or saying, here's what the rules are, because their behavior tells you a lot about how they understand what they permit themselves and give themselves permission to do. I don't give myself permission to be an idiot. Because people trust me, and I'm never going to betray their trust. If you run other people's money, you have to handle it like it's a newborn child. You can't just roll the dice because you want to make an incentive fee.
Yep.
People get that all wrong. If you're running money on a discretionary basis, the job is to play defense. Your job is to become Lawrence Taylor, not LaDainian Tomlinson or whoever the big running back of the day is.
So you say play defense, because you also hear another side of the coin where they talk, like I'll hear some traders or some people talking about like Babe Ruth and how he always swung for the fences, and that's how come he was the best home run hitter, right? But he also took a lot of losses. But I know you focus on playing on defense instead. Do you disagree completely with that idea of like swinging, like, you got to get those big winners, or is it like a marriage between the two? Like, I'm just curious on your thought between that thought and then yours.
So we both could be sitting here talking about our strategies, and they both can be valid and true at the same time, even though they're completely different. So the goal is to find which one is most compatible for you. In that day and age, in the early 1900s, Babe Ruth decided he didn't want to pitch anymore, so he became a hitter. And he did literally and figuratively swing for the fences. And he has some of the records that still stand as one of the greatest of all time, Shohei Ohtani notwithstanding. Who's good. He still has a long way to go to take out Ruth, in my opinion, but more will be revealed. The key thing is, like, what is your emotional makeup? If you swing for the fences, yes, you have to deal with striking out. But I think, like, there's still some reasonableness in there, right? If you have a 30-40% accuracy rate, then you can mathematically calculate what your what the magnitude of your average winner to loser is in order to have that work at least as a break even. And so the biggest thing folks can do if they want to look at that ratio and kind of see how they are and what their personality is reflected back to them from a trading strategy standpoint is, in my humble opinion, how long are they willing to hang on to their winners? This is the defining part. You can calculate your protective stops, but handling winning trades is oftentimes the most difficult part, because the shorter term traders have this irrational fear like, well, the gains are fleeting. They're here today, gone tomorrow. And that's not true. I don't know who came up with it. The other fallacy is that day traders make all the money. That's some of them do. The emails that I get, the largest quantity of traders that fail are people who are trading the E-mini, the NQs, or the Russell 2Ks. And that could be the big daddies or the minis or the micros, which would make sense because that's the margins are lower. People with smaller accounts can go there, right? But without any discipline, it doesn't matter what size, doesn't matter what what your holding period is, just because the quantity and the numbers of people are there. And in public, losers don't show up. They don't be like, yeah, man, I just took $140,000 401k down to $28,000 in about 4 or 5 months. It was easy for me. Tax loss carry forwards. It's like I didn't have to try.
Yeah.
It's just losses are us, baby. So and those are for the people who are stay-at-home do-it-yourselfers. If you're at a firm and there's training, the rules are a little bit different. But even still, the folks who go through those training programs, not everybody gets a seat, and you have to pay for your education, so the system's a bit bastardized. The ultimate test, I think, if you're doing this at home is ask yourself if you have a gain where you're risking R, 1R, and your gain is at 3R, why wouldn't you hold it to see if you could get a 5R? Like, what makes you have that hair trigger response to want to offset a winning trade at 3R? You see? Because I know this for a fact. I think if you're looking at taking every winning trade off at 3R, you're never going to have 5R. You're never going to have a 10R trade. Right? And this affects your profitability because maybe 1 trade, 2 trades, it doesn't matter. But if you're doing this over years and years and years, you're leaving a lot of money on the table. The opportunity cost is giant, and you don't even know it.
Mm.
So you have to be willing to feel all your feelings. And you have to be able to challenge everything that you think you've been taught, because I don't know who the hell said, and I've done the study that showed the most of the growth in the SPY over the last 30 years, like 90+% of it came from overnight and over the weekend. Very little of the net gain of everything happened between the open and the close. Some did, but not much. Nowhere near a material number. And so I think, like, why would all these people sit there in front of the screen when there's so much easier money to be made, right? And if you bring this up with people, they snap back at you because it's like you just said their girlfriend has this big ass, or, you insulted them in some way, which, of course, I would never do. But you have to look at the data. And you have to be open-minded. And I think there's a lot of folks who, going back to your first question, being closed-minded is another reason why people don't evolve and make it through a decade. Is because they weren't willing to look that they had become the problem in their trading. There was the market or was some other factor that was outside. Did I explain that? I mean,
yeah, and I wanted to also ask you though, because you said as you manage money, you're also dealing with multiple personalities at once. So that's a unique position that you're in, because most of my viewers are independent traders, right? And so they're only dealing with their one personality, right? Their own self. How do you talk to your constituents, the people who who implement you to execute for them on their behalf, when all of these emotions are coming to you, including your own, right? Like, including your own, you have to manage. Like, what do you tell to people outside that you are managing their money, like, to help them feel calm and help them, like, understand, like, hey, this is what we need to do? Because that could be helpful for people who are doing their own money.
Mm-hmm. So I don't really do that, and I'll tell you why. I know a lot about myself and trader psychology and emotional intelligence, but I'm not trying to be a therapist to these people. So that when we do the interview process, first of all, I don't really have a lot of client contact because I'm concerned about making the money. In the time that I do spend speaking with the actual owners of the money, it's more about explaining the process, right, and staying on message. If a person feels fear or they feel greed, I don't really entertain those conversations, which is one of the reasons why I don't seek allocations from a lot of bigger outfits than the ones that I'm involved with, because they want to talk to you every morning. And I don't want that bullshit in my life. Don't call me in the first thing in the morning and ask me what I'm doing if you've allocated money to us. And I know who the people are at the firms that do that because it's part of their job. It's part of that control thing, or trying to get a read on you as a human being. And I find that annoying. To me, it says mistrust. I know it's kind of par for the course. For some of the folks who don't understand the institutional side, you might not know what we're talking about, so we'll move on. But I don't try to do anything to assuage or allay anyone's fears. That's something that they have to be able to handle on their own. Don't call me if you're scared in the market. You see, that's not what I want to get into. because I spend a lot of time, and we spend, Victor Sperani spend a lot of time up front making sure the client is a good fit for us. It's not just like we need money to run because we're snipers and we need the bullets. And you find this out too when you're a young person coming up and you're going through the dating world. Not every really good-looking person would make for a good partner. There's a lot more to it. So the hard thing that you have to learn if you're going to go out and start running outside money is you have to say this to yourself. Just because they're liquid for $10 million, they're not happy with their current advisor, they're down in their account, and they're looking to make a move, does not make them an ideal candidate for you. There are criteria there that would lead you to maybe want to have a conversation. But it's just like any other type of relationship. There has to be a certain type of chemistry, right, between the parties. They have to know. We do a lot to manage their expectations, too. We don't make promises that we can't keep, right? And I want to just go take a step further because you'll see, like the other day, a bunch of reports came out on who owns Nvidia. The thing was up like $30. Then it was up 20 something. Then it was up another $8 in the aftermarket, coming into earnings. So let's play that out. If you had that in your portfolio and people saw that move, they could pick up the phone and say, "Hey man, Nvidia was up a lot. Are we gonna hold it here still, or are we gonna sell some calls? Are we gonna buy married puts, or you want to lighten the position a little bit?" Or if it's not in the portfolio, "Hey, I was seeing Nvidia today. Do we have any of that?" And they know damn well that this is because there's transparency. So they try to steer you, right? So you have to draw good boundaries with people. I'll finish the story by saying there was a very well-known trader. I can't mention his name because it would kind of betray his trust. But he had 3 parts of a client agreement. The first one was, I promise to run my model on your account. 2, I do not promise to make you money. 3, if you call me 3 times, I'm giving you back your money. And he had the track record and the bravado to be able to pull that off. But I don't want to be like a financial advisor at a wirehouse where people can just call me out of the blue and ask me about their money. It's like you've made a lot of money in another area of commerce, real estate, you had your own business. So here's what I want you to do. I want you to fund the account, sign the client agreement, otherwise, give us your money, and then go away. There's no reason for us to have to talk because this is now a subsidiary of your overall operations, and there's nothing that you know about the market where you're my boss now. You're just the person who funds the account, and I'm using your money to make myself money. You get to keep the majority of it as far as an incentive fee standpoint, but we're not buddies. We're not friends now. I don't want to talk to you every morning about the markets. And don't open up an account on the side and pick my brain on these bullshit penny stocks and what do you think and ask my opinion. That's not what I do. So you have to have really clear boundaries and a clear understanding of what it is that you do and what you're willing to do. I admit when I was younger, I would have stood on my head and rotated because you need the money under management. As you grow older, right, so the things change. I admit it sounds like I'm a certain personality type now. But over time, when you're younger, you do have to kind of sign up everybody who can fog a mirror. When you get a little bit more experience and have a bit of a track record behind you, you can become a bit more discerning on who you want to deal with. I want to also clear something up. When I said I had all these personalities, it's true that, yes, you speak with a few people on the phone. They have different personalities. But I meant to say I had 17 personalities in my own brain because the market's a chameleon. And how you trade Hong Kong is different how you would trade South America. It might be different than how you trade America. And even inside America, how you handle equities or equity derivatives are completely different on how you might handle commodity futures. And then inside commodity futures, there still might be certain things that work better than directional trades. You know what I'm saying? You might need to create a synthetic position. You might need to look at, like I said, old crop, new crop spreads. So all of those different strategies have different personalities. And the goal is to find which one is most compatible with your makeup while you're trying to deal with the ever-evolving amount of uncertainty because you can't predict the outcome of any particular trade. You see what I mean? So like you throw this up to somebody and be like, that's why people fail. It's not that they're failures. It's just that what they think trading is and what it actually is are oftentimes two very, very different things.
And on that point, I think everyone needs to rewind. And even if you're a trading individual, you're just trading your own money, you need to re-listen to this part because, man, Mike, you definitely dived into. People can ask themselves those exact same questions to themselves rather than to
Yeah.
how you're asking to potential clients. They can ask all those questions to themselves, like, and prepare themselves realistically what to expect, so that way they don't come into the trading world thinking they're going to drive a Ferrari next week, and attack the market with the wrong expectations and the wrong emotional, makeup. So I really appreciate you sharing that because I know, like, if any of y'all miss that because you're like, oh, I don't trade other people's money, you need to go rewind that and listen to it and think of yourself as asking your own self those questions. But I wanted to ask before we wrap this up, because you mentioned different markets, and some markets you might have to trade a little differently than others. But are there some actual like truths of the market where like it works in every market, like truths? I guess is the only way I can put it.
Yeah. Yeah, keeping losses small. Like no matter what you're going to endeavor to do, you have to have the courage, the inner gumption, the fortitude to experiment. That's how you evolve. It's not that you're trying to make money on those trades. You're trying to see, is the process that you're going to endeavor going to work over dozens of trades. So you have to risk, paper cuts, fractions of a percent, 1/10 of 1%. Do some chumming, as they say in fish, right? The chumming is attracts the small fish. The small fish attract the bigger fish, for which you have a lure or a baited hook, to bring in the big fish. So part of evolving is to be able to experiment and not to think that what you're doing today is going to work this time next year. So you have to invite that failure in, because what you learn in that process of experimentation, you're doing it for the data. You're not necessarily doing it for the financial win. And this goes back to your very first question on how come people burn out or they don't make it over a longer period of time. It's because they lost the excitement of what it takes to experiment and to figure out new things, which you would want to have. Like, you don't want to go into a war with a 9mm gun. Like, you need to have a whole host of varieties of attacks, and you need to know when to retreat. So keeping losses small, but then having the willingness to try new things to see if it's an even better fit. I know it's a little awkward too, because like you could be married with kids and you're happy with your spouse, and on some level I'm asking you, like, well, how do you know there's not someone else there that would make you more happy than your spouse, right? So there's a different type of commitment. But I think there's a way where you can invite a little promiscuity into your trading by just doing some testing. Now, you can do it in a simulator, but then obviously you have to do it with real money so that you can run the emotions through yourself, right? Because we're all running financial systems, whether we're doing it with discretionary, chart reading or purely systematic trading. That's one side of it, but then you have your emotional system. And that's the key, is like you want to be in touch with your emotional system. Like, what's your makeup? What are you doing this for? If we're all pleasure seekers, how do you harvest pleasure out of this entire process from a macro standpoint, and then each and along every step of the way?
You basically, what came to my mind was you got to constantly be a beginner. Like, think yourself as a beginner so you can constantly try new things and try to get, like, it's always changing. You always have to be willing to be like, hey, I don't know this. Let me try this. Let me try this. And even if you find something, it sounds like the ones who just stick to that one thing and say, by golly, this is the best thing in the market, I'm just going to do this, I'm not going to try anything else, are the ones that could just disappear very quickly.
Yeah, you have to milk it while you can. They say, there's a saying in the commodity markets that you have to make hay when the sun shines, right? So use that, exploit that strategy for the amount of time where it's exploitable, right? But, they say in baseball, you can't steal second without taking your foot off first. Like, you have to invite a subtle or an appropriate amount of risk into that process. And if you fail at it, it doesn't say anything about you as a person. It just means for that moment in time, you had a little too much egg and not enough chocolate in the recipe. So go back and rework it and try it again. Because all you're trying to do is harvest the information, harvest the data. The profitability is the second stage. Like, can you scale? It's just any business model does that. We're going to test market something in Nacogdoches or in University Park, right, in Dallas. And then if it works there, we'll try a few other municipalities. And then if it works there, maybe we'll take it to Chicago and replicate it. And then once we have a bigger sample space, now we can go start doing national advertising or endorsements, you see? So that's really all you're doing is chumming to find the new ideas that are going to work on a very small scale to get proof of concept. And if it fails, you don't care because you didn't risk any real money. But you had to do it to go through the process. You're not going to win money in the markets from ideation. No one cares how smart you are. You get paid to execute.
I love that. And on that note, before I know people are probably like, okay, how do I learn more about you? Where can they find out more about you?
Well, thank you so much for asking. You're always super, super generous. What I always try to do is and I had this when I came up, because no one helped me. Like I'm self-taught, and there was this thing that I called intellectual greed. Anytime I'd ask somebody for hope, they always felt like I was looking for their job. And so one thing I've always done is given away, the audiobook version of my book for your audience, and that offer still stands. Like I'll still, offer that. I'm still going to offer that to your audience, and give it to them for free if they want it. The website is Martin Chronicle. The YouTube channel, you'll find it under Martin Chronicle. I admit, under the different syndication channels, it might show up as the Michael Martin Show or this and that. But let me just make sure. I'll double check the link while we're here.
So what I'll do, everyone, is I'll provide the link in the show notes, so that way you can easily just click on the link and download the audiobook. I highly recommend you listen to it. It's free, number one, but number two, you're going to get so much value out of it. And then check out his show, because I listen to Mike's show very religiously, and they're very short episodes, but you can listen all day because he records, it sounds like every single day. So other than that, man, hey, I appreciate you as always, brother, and we'll bring you back in the future, of course.
Yeah, thank you so much for having me. The link was martinchronicle.com/Alex. I set that up, and any one of his listeners can get the free audiobook. It's probably worth $30. That's the going rate. Thank you, man. I appreciate you and everything that you do for the community. Your show is killer. You bring on some really great people. Our show's a little different. You bring on folks, and they kind of tell their story. I usually just focus on my own story, but I might start having some guests on. Your show is a daily listen that traders, whether they're day traders, swing traders, or position traders like me, they can certainly learn a lot. And I've watched a lot of your shows too, and it's really good for me to open my mind to see how folks are doing things, especially on the shorter time frames. So I appreciate what you do for the community too. Your show's a big hit.
Thanks, brother. Take care.